Despite the Fed euphoria, one of Wall Street's biggest bulls is turning bearish. Let's bring in Jonathan Golub, Chief U.S. Equity Strategist at Credit Suisse. Jonathan, good to see you.
Good to see you.
Are you, in fact, turning bearish?
I don't know if I'm turning bearish, but I will tell you, I think that there's part of this conversation that's being missed. If you took the Fed out entirely and you took trade out entirely, we have really lousy economic data. And what you've had for really since September is the Fed is bullish and bearish and bullish and bearish. And then we're on and we're not going to, have a problem with China, and we are. But if you put that aside, we've had a 110 basis point drop in the 10-year bond yield since November. You've looked at the ISM, which has gone from 60 to, a little over 51. You have industrial production rolling over. And that's the good stuff, because that's in the United States. It's weaker abroad. And so I think the key here is, there's risk to the downside on the economics. And I think that that's getting kind of obscured by all of this conversation on short-term news flow.
So in terms of getting more cautious on the markets, is that causing you to rethink where the markets end the year?
Yeah, I don't think so, but I'll tell you what I wouldn't be doing. And listen, I've been on the show before where every time the volatility goes wild, one of you guys basically, and I say, you want to buy into this volatility, it's going to resolve itself. This is the one time in a long time I'm saying, I wouldn't be buying in right now until you get this data to stop deteriorating. So if you see more downward pressure on interest rates, on inflation, I'd be holding off for a better opportunity. Do I think that this all resolves itself fine? Yes, but I'm not sure I'd be buying today.
Jonathan, but I don't think it's missed. And respectfully, what I would push back and say the reason why the internals have been so bad, the numbers have been so bad, is because of this China tariff situation that's been going on since last March. A lot of people say the reason why things are slowing down is because of what's happening between these two superpowers.
I think there's some of that. But, first of all, what's the big issue? We had a huge boost to the economy coming from the tax cuts, coming from a spending bill, and that's rolling off. And that was probably, two-thirds of the weakening of the economy is the fact that we're losing that. Why is it that Europe has been weaker or the rest of the world's been weaker? Because they didn't have that boost that they were losing. So, yes, is this trade weighing? Absolutely. Right now, how do companies make a long-term capital commitment on retooling a plant or deciding whether to put something in one country or another? I think that they have no choice but to sit on their hands. But I think if you get beyond this, what the reality is that it has to be about the economics. And right now, whether it's trade or something else, the economic data, and just look at interest rates, inflation expectations are just sloppy. Do I think this works out fine? Yes, but I wouldn't be going and jumping in today if I have a little, if we have a tiny pullback.
As a trader, whenever you say the market's got it wrong, I'm thinking about it right. You're usually wrong. So I'm not saying you're wrong.
Okay.
But when you look at the overall market the last couple of days, does it make you feel as if the market doesn't care about the internals right now? It's macro.
Yeah, well, listen, in the near term, the news flow is going to dominate everything. And what's really very hard to do is to say, if we simply put aside the Fed and trade, what would this thing look like? But, I think that's what you have to do, because if anybody thinks that they can predict what Donald Trump is going to do with Mexico, I'd like to meet that guy, because I just, my confidence on that, or whether or not we're going to get one move, or you talked about 3 moves.
Possible.
How do you know? I'll tell you what the market's telling you, because you can buy and sell this in the futures market. Market's saying between now and the end of 2020, 4 Fed rate cuts is what the market's saying. If you got 1 or 2, that means the market would be disappointed. That means the Fed is off sides right now in terms of interest rates.
Yeah. Jonathan, thank you. Good to see you. Jonathan Golub. What do you think?
I guess the issue is this. So we know we have a Fed meeting coming up in a few weeks here, and the Fed fund futures are pricing about a 25% chance of a cut. If they cut, that would be a big surprise. I think that is not something that investors of risk assets would feel pretty favorably about, because we're not at a point, especially if this week's or last month's jobs data is not a huge negative surprise, that sort of thing. So I think surprise rate cuts in the next couple months is very bad for equities. I think when you think about that double top that we have at 29.45, I think there's plenty of room to bang around between 29.45 and 2600. And I think you're going to get opportunities to buy it at Jonathan's levels to get back up maybe a year from now if things bottom out towards his $3,000.
What did you do today?
The best thing I did today was a lot of trimming, because, when you see the markets moving around like we've had a lot of great trading days, quite frankly. And I think a lot of it, when I say algorithmic trading, when we're moving as fast as we are, like the other day, going up 500 plus points and now total 900 points in just a few days, that creates some of the opportunities to now take off some of those positions. So that's exactly what I'm doing. I'm taking off more positions. The one thing that I actually added to today, actually rolled up and added to today, was the GLD. And I know that sounds extremely defensive. It's something the guy knows a lot about in terms of the metals markets. But a lot of people, we've seen paper in GLD. We've seen a lot of paper in the silver stocks as well. So is that an area where people are starting to flock to because they feel like there's a little bit of safety there, Mel? Maybe so. All I know is we're seeing huge sums of money going in the derivatives markets in those directions.
All right.